Hi everyone, today we're going to be covering some airline stocks and I've been asked quite a lot of questions about them, so I thought I'd talk about them a little bit today. I also thought if there's any particular airline stock that's really popular, I can do a video on it, or maybe do a comparison video between a few airline stocks. And also I've not really covered cruise companies for a little bit, so if there's a demand for me to recover cruise companies, then I'll also do that as well, because I haven't talked about Carnival for a bit. But I've had a lot of questions about a lot of airline companies, so I thought I'd do a general video on it today. And as always guys, if you can smash the like button, that'd be absolutely amazing. So we'll get on to it. So a lot of the questions I've been asked about is, I've got investments in Boeing, so that's kind of like in the airline industry, but I'm not going to talk about Boeing too much today. But I have an investment in here of Jet2, which is known as Dart Group, so that's like my kind of play in this industry. There's also a lot of companies that have been talked about was Delta and Southwest, obviously two big holdings of Warren Buffett, and eventually he sold out of them. They've been kind of two well talked about airline stocks. We also have British Airways, and we have Wizz, that's one that I've been asked quite a lot about recently, and Ryanair. Those are some examples of all these stocks, and the common theme of a lot of these stocks is that they're down absolutely huge, and some are down a little bit more than others. But in general, they're still down quite a bit, and they've not really participated with the market rally, because we've had a bit of a rally over the last few days, and some of them have kind of participated a little bit, some not as much. But there's a lot of these companies are still on a big massive discount compared to a lot of stocks out there that are now back at kind of 52-week highs. So the main reason a lot of us are getting into this is the risk to reward and the gains that we can make from this. I think everyone's kind of looking at this and going, the stocks are down absolutely huge, we can make a lot of money on this. But with this industry, especially travel and leisure industry, this is currently one of the riskiest investments you can make. You've got to be prepared that you might take a lot of hit on here, and you've got to be prepared that the stocks might go down from here. Because when we look at this industry, this is the industry, as well as the leisure industry, that's going to be affected the most, and you've got to kind of plan in for that. And sure, there's a lot of potential to make 100%, 200% gains on this, but at the same time, there's a lot of potential that your stock can go down, 10 to 50%. I think even some of these companies, we could even be looking at bankruptcy, because I think there is going to be a lot of things affecting this industry. Now, the big thing with this industry is, are people still going to go on holiday? And I believe that in probably 2 to 3 years, we probably should be getting about to the numbers where we were at the previous year. So in 2019. So I don't think that is kind of the worry. It's kind of the worry of how a company is going to survive until that point, and what changes will affect the industry. So for example, if you were going to get a flight from London to New York, is that flight going to happen? Are you going to be allowed to go from England to New York? Are you allowed to go from New York to England? What restrictions on passenger capacity is there? What testing are going to be in place? And that's the kind of big worry with this, is kind of weighing up this risk, because with this industry, these stocks aren't going to move huge until there's positive news. So if the stocks end up getting delayed, or should I say the airlines get delayed about reopening, these stocks are going to not move at all. It's when we start hearing some good news about that these companies can start operating again, these are when the stocks are going to go up. So there's a lot of risk that the companies still might not move upwards until there's that kind of confidence that the companies are going to start pulling money in. So with this, there's a lot of risk in these investments. At the same time, a lot of these companies, there could be massive reward in these kind of companies. So if you are buying into a sector like this, or you can take the airline industry and take it into like the leisure industry as well, like my investment with Hollywood Bowl, you've got to be careful when you invest in these companies. You've got to be buying the best companies around. If you're buying the best companies, you're going to be safe. Which companies are going to carry on doing well after the coronavirus? Those are the companies you need to look out for. You can't be going into buying companies that weren't doing well before the coronavirus, the companies that had the balance sheet, the companies that weren't growing the profit. You've got to be looking at which companies are going to do okay after the coronavirus. So one of the things that I'm going to be looking out for in airline stocks, and this is why I made my decision to get into the investment that I do have, is the balance sheets. It's really important you start looking at balance sheets. You've got to be looking at companies that have a lot of cash on hand, that don't have to take as much debt on, because if they have a lot of debt and then they're going to have to take more debt from the government loans or bank loans because they're not operating, that's going to load on the balance sheet, that's going to affect the dividend. So the balance sheets are king right now. It's the big thing that we learned over the last few months, is look at companies with balance sheet. When I look at Dart Group, I look at a company that has a lot of cash compared to debt. one of the reasons why I got into the stock. And with that kind of cash to debt, it'll be very easy for them not to take on that many loans and get back to having a decent balance sheet, and also get back to paying that little dividend they have. So you've got to be really careful when you're looking into these airline stocks, that the companies you're looking at, as well as all the leisure industries, that you're looking at them balance sheets. And the other thing that's really key when you're looking into these companies is the profit making of these companies. Profit is key. If they are making profit and they can carry on making profit, they can carry on paying debts off, debts that they might have to take out, and that profit is going to reflect in the share price gain, and also they'll be able to pay that dividend. If you're buying companies that have struggled to make profit increases over the last few years, then that's really going to start affecting your investment. So I invested in Dark Group because I believe that the marketing is fantastic, the brand is fantastic, and over the last few years they've just increased that profit going forward, and especially they'll gain on the collapse of Thomas Cook. It's a bad thing, but the company is going to gain from that because there's less competition in the UK right now because of that. If you invest in a company that's struggling to make profit and they're taking on a lot more debt, that dividend ain't going to come back soon. It's going to have to focus on that balance sheet, getting that debt off, and obviously if they don't make profit, you're going to see that company maybe look at bankruptcy. So this is what has always put me off companies like Southwest and Delta, is when you look at them airline stocks, they're companies that their profit has not increased over the last 3-4 years. Look at a company like Dark Group, their profit has increased. So that's something you've got to be really careful of. Now, I'm not saying that I'm 100% right and Dark Group is a better investment than Southwest or Delta. I'm just saying these are key things that you need to look out for, because obviously that's what's going to be helping the companies when they're going forward after this coronavirus outbreak. So that's me talking about airline stocks, because I know a lot of people have asked me about this, and just to cover some key points in this. But if you're getting in this industry, prepared for your stocks to go down, because they could go down. At the same time, you can get rewards for them. That's why we're investing in them. These are a lot more risk to reward kind of things. As well as that, make sure balance sheets are key and look at which ones are going to do well after the coronavirus and will be making profit going forward, so they can pay off any debt that they'll have to take on to survive. And those are some key features from today's video. But that's me talking about airline stocks. I hope you enjoyed it. I hope it gave you some useful tips. If you could like the video, that's absolutely amazing. Let me know down below if you want me to do any deep dive into an airline company, and I could do that. Maybe some comparisons between airlines. As well as that, if you want me to cover Carnival and cruise companies, because I've not covered them for a while, let me know down in the comment section below. And as always, I'll see you on the next one.